Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro. In today's Stock Market Live, we got a bunch of stuff to talk about today. The futures are actually bouncing back a little bit, despite the fact that everything is pointing to the downside. I don't care where you were on YouTube or whatever channel you're watching this week. Everything has been talking about the bear market intensifying. A lot of people are scared of the price action right now. The stock market selling has gotten heavy. Not helped last week by AMD pre-announcing poor guidance, which is actually something similar that Walmart did, I guess, around last earnings report, maybe about 2 weeks before the earnings report. Walmart got hit. Walmart stock got hit, rallied pretty quickly after the announcement, which was a little bit weird. Now, the one thing about AMD stock today and the short sale, which is setting up as the much better idea today, is it actually has major support not too far below where it is. So we're actually going to take a look at that support and judge whether or not AMD stock is still a good short sale. We're also going to work our way through the stock market power pyramid. We're going to cover the market, go a little bit higher, go to the sectors, break down industry groups. And we do have a couple that we're going to speak about. And then we're going to go right into the individual stock picks. So remember, our Monday morning trading game plan sets up the entire week. Something that's really interesting right now is how far the S&P 500 or the SPY ETF has actually declined after Friday. Now, how much is left to go in that trade to set up your conviction level? That's a big thing we're going to talk about today. If you remember last week, I think about a week ago, we actually broke it down into position sizing based on the quality of the idea and how much room your stock has to go. So we're going to break that down. I'm going to show you a really clean visual today in the S&P 500 using the SPY ETF. We do have a couple of sectors that we're going to talk about right now. Two that are bullish, one that's interesting, and one that's getting hammered. And we're going to talk about Tesla stock as well. So we got a bunch of stuff to talk about today. So stick around. We will be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. Obviously, everything that we discussed here is for educational purposes. Your job to make the final decision. It's been my mission to help you make better decisions. If we do a good job today, please do me a favor, hit that subscribe button and hit that like button. If you have any follow-up comments about the trading game plan that we're mapping out this week, leave those comments below the video, and I promise I'll get back to you as soon as I can, okay? So we're just going to hop right into it. There's a bunch of stuff that I want to cover this week. I think probably one of the biggest things is the CPI this week and the kicking off of earnings. So let's just talk about the impact of what the CPI means, which is Thursday. So we got earnings unfolding during the week. We'll go into individual stocks there in just a second. CPI is going to dictate what the Fed is going to do in the next meeting. Obviously, unemployment, interest rates, CPI, GDP, those are like the core, the quad, the quad legs of the stool that everybody should be focusing on right now for the next steps by the Fed. Now, the Fed and Jerome Powell have been very, very aggressive in their language, hawkish versus dovish, and it's been a lot more hawkish lately where they are going to do everything they can to bring inflation down. If CPI comes in cooling off just a little bit, which is probably not going to do because energy prices have gone up. I don't know if you live in California right now. Energy prices are through the roof. They were actually sub $3 per gallon for just a little bit down here in South Florida, but over the weekend they rallied again. So not anticipating CPI to come in cooled off, which, what does that mean? So remember, everything that we do, if this happens, then I plan to do this. If this happens in the market, then I plan to do this. We will likely see another push down. But what we need to first do is set up the big picture of the market. So with rising interest rates, that means that growth stocks, technology stocks, most likely going to get hit the hardest. So we're actually going to go right over into AMD after we take a quick look at the SPY, and we're going to break down sector rotation as well. All right. So first, we're going to hop on over here and we take a look at sector rotation. You can see Friday actually kind of imploded, but the week was actually pretty good. And as you recall, energy stocks, which just vaulted higher this week, last week. Now, this week with energy stocks, one of the industry groups, some of the best stocks to buy after the rally last week, need to pause maybe just a little bit, maybe one more day after many of them reversed on Friday at resistance levels. I'm going to pull up those charts and show them to you as well. So we're going to do a little bit of a deeper dive as we work our way from the market, which is the three major indices, work our way just a little bit higher to sectors, and then we're going to get into industry groups and some individual stock picks for the week. But more importantly, it's very critical to map out the entire week of the stock market and what you anticipate to happen. Now, a lot of people are like, you can't do that. Yes, you can. That's the whole point of setting up ideas. If this happens, then I plan to do this. We had a really good question. I don't know if Chris Frazier happens to be with us today. Hey, Dustin Watson. I'll make sure I say hello to Dustin. Dustin, I actually owe you a phone call. I promise I'll get you on the phone. One of the things that Chris Frazier had asked on our coaching session, which was on Saturday, which was how do we distinguish between a P1 trade, which is initial position size, and when we should be trading a little bit bigger. So we're actually going to hang on to that and take a look. So we got, these are the individual stocks. So you can see actually here, futures are actually not doing that bad, but I want to go over to the SPY and map out. You can actually see where we did the levels in the SPY. You can see the next level going all the way back into the middle of 2020. And we all know what happened in that area where it imploded, where it paused, and then where it kicked off again. So you can actually see the 390 level is where we had this little bit of a short covering round. Now, if you remember last week, we were very clear that you need to have price action scenarios no matter what happens. And that 360 level in the market was a big level. Let's actually take a look at that. And then we're going to map out what we're looking at this week in the big picture. So if you take a look over here, I'm actually going to bring this over here. When we broke down here at 360, we said there's two things that you need to pay attention to. What do I want to see happen next in order to increase my conviction level, hold on to trades, and maybe even look to add, in this case, to a short selling opportunity in the market? So the S&P 500 broke down. Now, in our mind, we're saying, okay, what we want to see next is follow through. If we get follow through, then we are looking at the next support level to hold that trade a little bit longer. We did not get follow through. As a matter of fact, we got a short covering rally. So this is actually a really good eyeball for what we can anticipate this week. So remember, if you happen to be new to the stock market, or if you happen to be new to our channel, we're very, very big on being prepared to make a decision before we need to make a decision. By the way, how do you like our new fancy coffee mugs, right? We just got them. I'm going to let everybody know how to get them soon. So we want to break this down because last Monday and the price action that followed was very interesting, but today's a little bit different, which is why I'm actually looking for us to trade lower this week. If we trade lower and if price action stays below Monday's opening price, and if the daily candlesticks are well offered. So well offered means lower low and lower high. And I'm going to actually show you that in 1 second. Then I plan to be more aggressive with short sales. The opposite of that is actually what we got in that little short covering rally after we failed to break down and hold that 360. Now, it sounds like a lot, right? It's not. As the market breaks down, what do we need to see to believe it's going to follow through? Well, we immediately need to see more of the same price action. If we get that, great. We can have conviction in that direction. If we do not get it, we pull back on our share size, maybe even move our trailing stop down a little bit, maybe even scale out a little bit. These are all the trade management parts. Remember, chart reading is not trading. The part that happens after chart reading is the trade management. The trade management is actually where the money is, okay? So I'm going to show you the visual right now of what we're talking about in the market, and we're going to look over here on the SPY. So you can see here's the breakdown. And if you go over here and you say, what do I want to see happen next? Right in this spot right here, let me actually clear that up a little bit. Right in this spot right here on that breakdown, you'd want to see another one of these. You'd want to see it break down again, and you would say, cool, conviction. I'm going to keep trailing it down, right? But we got exactly the opposite of that the next day. So this is the big thing that I want to get across to everybody, and it's coming up a lot in our coaching calls recently, which I think is pretty good. And I'm going to say hello to Lewis here. Lewis is on the coaching calls every morning. Hey, Lewis, how's it going? Now, here's what we want to talk about. Once you place a trade, you had all that information that went into setting up the idea prior to the trade happening. Too many people, after they put the trade on, think the market just stops and everything's static. You have to continue to read what's going on in the market. You have to read the order flow. You have to read the tape. You have to read your P&L. You have to read other stocks. You have to read other stocks in the same group. The more of those distinctions that you could notice, the easier trading becomes because you're no longer shocked because you know what you're looking for. So again, I want you to write this down. When you know what you're looking for, you're no longer lost. Now, once you know that, Which side of the market should I be aggressive on? Aggressive also is a couple of different things. How much initial position size you should have. Do you have more share size on your initial entry because it's obvious? Or are you holding longer? Or are you building more positions? Versus what we saw on Tuesday and Wednesday of last week. And we'll actually just show you that map again here, where we actually rallied, right? So we had Friday. Let me actually pull this out. We got Friday, Thursday, Wednesday, Monday, Tuesday. So Monday, Tuesday, we did not follow through. So the point that I want to get across is trading in this direction with the big picture is more aggressive from a position sizing perspective. This rally here, basically this 2.5-day rally, was against all of this. Now, you might be saying, well, yeah, that's obvious, right? But this is the part of where you elevate yourself and you separate yourself from everybody who says stock trading is hard, the stock market's confusing. If you know what you plan to do before you need to do it, now you're just basically doing exactly what we teach all the time. He's like, oh, that's what I'm supposed to do. And now it's not an emotional reaction anymore. Now, I know a lot of people can say, yeah, that's obvious. I do that all the time. I got to tell you, we're hearing people that are entering our boot camp, they're coming in. A lot of people made bad decisions when 2022 came in and we started pushing down and they froze and they couldn't make a decision. Nobody likes to lose money in the stock market. There's a lot of people trading with scared money right now. So I want to work your way over to a different conversation. You need to make a distinction between, are you investing in the companies that you're holding now, where maybe you're trading for future cash flows, maybe you're holding for dividends, maybe you're holding for long-term capital appreciation. And Tesla is actually one of those stocks we could take a look at in just a second. If you're investing, that's a different scenario. That's long-term, maybe 401k, maybe an IRA, that kind of thing. It hurts, but if you believe in the future cash flow of that company and you like it, there's reasons to hang on to those ideas. Longer-term ideas. You don't necessarily want the money. You're not looking to grow your account by the week. You're looking to grow your account by the year. And year over year, see that compounding. But the challenge that we're having right now for a lot of people is they're not talking about investments. They're talking about active trades that they did not have a plan if it did not move in their favor. So in other words, they were frozen and now they're sitting on bad positions. So again, everything we're talking about here is for educational purposes, but I want to give you a little bit of insight into how I taught people on my trading firm. First, if you make a bad decision, do not trade out of it. Get out of it. There's a big difference between, I loved it, I made the wrong decision, and now I'm going to try and rationalize how I'm going to hang on to that position. Do not do that. If you made a mistake, get out. Second part is, if you kind of got frozen and you're scared and the price action is got you in a position where you're afraid to make a decision, what I teach, one of the smartest things to do is you want to get your head back and you want to get some of your buying power back. If you still believe in the position, it's still within that time frame that you like, but maybe the loss is a little bit more than you wanted at that particular point, scale back. If you have 2,000 shares, take some of those shares off. If you have 1,000 shares, take some of those shares off. You can always put a buy stop in the market to get back into that trade. You can always set an alert to get back into that trade. But now you're getting buying power back. You're getting all that stress because you're lowering your risk profile. So what I teach and what I personally do is, if an idea is not working out, but I still like it, I always reduce my risk by cutting back on my share size with a game plan to get back into those ideas. Now, Tesla actually is one of those stocks that, again, big news on Tesla. We're going to talk about Rivian in a second, but Tesla breaks its Chinese factor, but still trades BYD. So let's talk about Tesla, and let's talk about Tesla stock and how the stock has started to come down. All right. Tesla is only one push away, excuse me, from this 205 level. You can see it's actually kind of hanging on the bid here. But here's the thing we have to consider here. 1, 2, 3, 4, 5, 6, 7, 8 consecutive days and another inside candle breakdown in Tesla to the downside. So this is another part of the equation that we want to talk about, because we have the opposite of this in energy stocks on the way to the upside, where energy stocks went so far so fast last week. Tesla is doing the same thing on the opposite side. So while the side of the market is obvious, we call that order flow, what we are now is too far from the optimal entry, and there is a support level coming up that does not validate new risk. So what does that mean? It means that it's going in the direction that's clear. But if we take risk, the reward potential right now is not worth it because it's probably a one-to-one risk reward. And that's not good trading. If you risk $1 to make $1, risk 5 to make 5, that's break-even trading. We don't want to do that. We want to risk 5 to make at least 15, especially if we're going to take that overnight risk. So with Tesla and the way Tesla has now broken down, and especially with the support level here, it's not that far from the support. So what we actually need to see is Tesla, which actually is coming back a little bit right now, is we need to see a couple of days like this, which will increase the distance between the close and the support level to justify that new trade. So we need that to expand just a little bit for the amount that we need to risk on Tesla. And just to give you an idea of what you normally need to risk, Tesla's candlestick was over $10 on Friday alone. So even if you're just risking Friday's candlestick, $10 risk on Friday's candle would translate into you need to make at least 30 to justify a 3-to-1 risk reward. So whether it's Tesla or we're going to talk about Rivian now as well. Rivian with the recall of the cars, right? 13,000. Depending on where you're reading in Rivian, they're talking about it's not that big of a deal, but they're basically recalling every car that they made. You can see it's actually down at $31 over here. So what am I looking for in Rivian? What am I looking for in the electric vehicle stocks? And I actually want to bring this out again. So Rivian's kind of like right in this area right here with a lot of room to go down to 24. So Rivian, if Rivian follows through below 31, the next support level is 24. So if you understand short selling and you're looking to make money on the downside as they go down, 31 below, a close below 31 with the initial target being 24. So that's roughly a $7 short sale profit potential in Rivian stock if this bad news continues to see it push down. So if your profit potential is roughly $7 and we don't want to risk more than 3-to-1, we want to risk $1 to make 3, then we're looking at risking maybe around $2.30, somewhere in that area on a Rivian short sale. So that's how that trade's setting up. We're going to shift over to the other side of the market, and we're going to take a look at some of these stocks over here, some of the stocks in the energy sector. So we're going to hop on back into, actually, you know what? I want to first talk about our game plan heading into today. So this is actually what we put out. This is obviously my nightly research that we give to everybody. This is the game plan. So you probably want to take a screenshot of this. Let me actually make this a little bit bigger for you so you can actually see it. 3 major indices took a beating on Friday. Now, this is the big thing I want to talk about right here. For Monday, I'm looking for a lower opening to take out 360 in the SPY. So remember, we're mapping out the entire week. So 360 over here is that level, and we're just above that right now. So I'm looking for it to take out that level again. Now, if you remember, one of the biggest things we are focusing on pretty much every single trade that we make, especially on the swing trading side of things with stocks, is you need to know what the stock normally does so that when you're about to hit that trade, you know how far am I from the expected profit target. So in other words, if it normally moves $10 and it pushed down and just started reversing, and when you buy it, it still has $9 room to go, that's pretty good. But if it pushed down and rallied already, and if it normally goes 10 and it already moved 8, that's not a good idea. So remember, it could be obvious, but the risk reward still needs to be there. So this is how we want to break down the market. And then we're going to go to AMD, which is an obvious short sell today, but there's support. Okay. And then we're going to go over to the energy stocks, which found some buying pressure. Okay. So with the market, this push down, and this push down, all of those were $30 to $35. So now we're establishing the price action of what the S&P 500 normally does in a bearish market when it pushes down. So from that, again, we can calculate or just really analyze what it's probably going to do next. Now, we need to add a little bit of juice to that price action because we know the CPI numbers coming out this week. That's going to influence how the market's going to react. Will the Fed be dovish or hawkish in that particular one? Right now, it looks like they're going to be more hawkish, trying to do everything they can to bring inflation down. So we know that $30 is the average move in the S&P 500, specifically the SPY ETF. So now we need to take a look and see how much room to go is there in the next move to the downside in the SPY, and what does that mean? So if we take where the SPY just started, which is over here, right around 380. That means that based on these normal moves in the market to the downside, we're looking at around 350 in the SPY, which basically only has roughly $12 left. So if you are looking to, let's say, buy puts in the S&P 500, looking for it to move down, or if you're just looking to short sell, or if you're looking for a spot where it might find support before it rallies, that 350 level is the level. Now, the challenge here is if we know $30 is the normal move in the S&P 500 to the downside and only has $12 left of what it normally does, that means it's used up more than half of what it normally does just based on last Thursday and Friday's price action. So here's where traders, we really get excited about what we're doing, is it's obvious, but the risk reward has changed a little bit. That's a part that we need to discuss. So if we know that the risk reward is a little bit used up already, we can still take the trade, but our initial profit targets and how we plan to manage those trades changes. So remember what we said all the time. We're talking about trading the same way we talk about driving. You get on the car, great, it's open road, but then it changes. So that's the same thing we have to do in the markets. So if we take a look at the SPY and we know that 350 level is right there, we're going to do something simple and similar with AMD. AMD looks amazing from a short sale perspective, right? Looking for the stock to go down. But if we go way back, we're talking about all the way back here in 2020, once, twice, 3, 4, 5, 6, 7, 8 different times, this 57.50 level has mattered. And you can see we're only $1 away from there, not even, we're about 50 cents away from there. So what's the trade in AMD? And this is, again, these are the higher levels of things you need to notice when you're trading. We're going to get the stocks to buy in just 1 second. Once you understand the side of the market, the second question is it still valid? So actually, in this case, AMD, the side is still very obvious, which is the downside, and we have bearish news. And is it still valid? The answer to that is absolutely it's still valid. Now we got to go to the third part of the trade, is how much profit potential is worth taking to put this trade on. Well, if we're at 57.65 right now pre-market, and we see that this 57.45 level is and should be a significant support, this is the higher level of trading that we all need to get to, where it's obvious it's still valid, but the reward potential is suspect on a new trade betting on AMD going down. So in this particular instance, we call this a two-step trade. I would not have full share size on this position as it goes down. If AMD can punch through 57.50 and close below that level, then I would expect it to go straight down to $50, which would expand the profit potential. Now, the opposite side of that is one of the stronger groups of stocks that we've had over the last week or so, which is energy and basic materials. So if we kind of hop on over and we start to take a look at, let me get it off the screen here, and we start to take a look at some of the energy stocks, and these are ones that I would definitely be focusing on. You can see how they exploded over the last 5 days. We're going to map out this trade. So we have APA, we have DVN, which again, right at a resistance level, pulling back just a little bit right now. SLB. Again, you can see we're trading the most recent price action right here. FANG, COP. You can see the percentage moves. They're pretty big, right? So now we have a different situation. Now we're talking about a buying opportunity that has a catalyst, OPEC, talking about cutting barrels down, which is why we exploded in the energy market last week. So again, read those headlines. It's kind of fun, right? But now we're too far from the optimal entry on the energy side of things. So this is what we would call a bullish echo. So I want to walk you through what that actually means. I'm going to actually show you the list. You probably want to take a quick screenshot of this just to give you some ideas for the week. So we're talking about a bullish echo. We're looking at this right here. It's an obvious long. So you can see here, these stocks obviously have buying pressure right now, right? But too far from the optimal entry for a new swing trade, okay for a day trade. So when we take a look at this list of energy stocks, they are absolutely in my list of stocks to buy this week with that surge that they had last week. However, the same way with AMD on the other side of the market, We have now gone too far, and there's resistance levels up here. So that means now in these energy stocks, that means in these energy stocks, right? I hit the wrong button. In these energy stocks for this coming week, best case scenario for me that I'm game planning for the energy stocks, I would love for nothing more than for them to pause Monday, maybe even Tuesday on lighter volume, setting up a new swing trade as a buying opportunity for a little bit longer term on the energy stocks after and if we get a light volume pause Monday and Tuesday. Now, there's a good chance that's going to happen because the CPI numbers are coming out on Thursday. So us pausing into those numbers and the expectation for the CPI number to still come in hot, mostly because of energy itself. So it's kind of a self-fulfilling prophecy here where energy prices are going up. OPEC's putting out that conversation. We've already rallied really hard into the CPI number this week. I'm expecting the energy stocks to continue to go higher after that. Okay, so now you see it, we're mapping out the entire week. So now what's kind of fun about this, and I hope that you're doing this, okay? I hope that you might go back and watch this video one more time or pause it and take some notes, and you're literally mapping out what we're talking about, because this is the highest level of eliminating all the stress from trading. Look, nobody likes to lose money. Okay, let's just get clear. The price action unfolds in the stock market. Sometimes it does what we want. Sometimes it, what the heck just happened, right? All of that doesn't matter, because if you are in control of the outcome, you are in control of the result. So in other words, if you know what you plan to do in any situation, and it's not that complicated, I like this idea because of X, Y, and Z. If this happens, I plan to hold it or maybe add to it. I like this trade because of X, Y, and Z. If what I want to happen does not happen, then I also know what I'm going to do, which is maybe scale back my position size or just take my stop loss and go to another trade. So if you are scared money right now, if you're afraid of the stock market right now, if the stock market is overwhelming you right now, strip out all the garbage. Just get all the way back down to what we're talking about right now. Is it obvious? Is it still valid? And how much profit potential is left if I enter a position right now? That's the first part for new ideas. So again, we're just going to go back into the ideas for the week. So again, you can see consumer cyclical pulling back mostly from the electric vehicle stocks, which we're going to take a look at those in a second. We've already talked about Ribbon. We've talked about Tesla. We also want to talk about some earnings this week. We also have, actually, let me hop on over here and over here. So you can see we actually have Pepsi and Chewy tomorrow. Nothing really that outstanding today that I would be trading, but Pepsi and Chewy definitely. But as we start to work our way into the week, you need to know your earnings heading into the week. So on the 13th, we have TSM, we have Progressive, we have Delta, we have BlackRock. Then as the week unfolds and we start to head towards the end of the week, JP Morgan, USB, Wells Fargo, Citigroup, Morgan Stanley, PNC, and UNH. Woo! It's going to be a fun week of trading. So we have the CPI, we have electric vehicles getting hammered, we have growth stocks getting hammered right now because of interest rates. We have interest rates being influenced by what's going on with the CPI number this week. And bank stocks kicking off earnings in a big way at the end of this week. Bank stocks, interest rates, that's all big mishmash as well. So here's what I want to talk about, okay? Here's the big thing I want to talk about. Number one, get your head back on straight. If you're frozen right now and you can't make a decision, again, for educational purposes, but I want to help you. I want to give you some insights. What I do is I scale back on my position size if something's happening that I didn't expect. I scale back or get out because I want to get that buying power back and make it back somewhere else. We just talked about the energy stocks, which were really strong. We also have a couple of interesting plays from last week in basic materials and industrial stocks. And I'm going to show you those charts right now. We'll actually take a quick look at those guys right now. So for example, let me actually, let me pull up those ideas. I just want to show you what we had. So this list of other stocks down here, right? We're talking about CF, but more importantly, I want to look at Alcoa, Boeing, FedEx, right? First, let's take a look at DKX. DKX actually holding support here for the week and right near a breakout level. So mark that one down. DKS, Dick's Sporting Goods above 116. That's going to trigger an alert for me. But one of the most interesting ones that I want to take a look at in a few different stocks, and this is basic materials and industrial stocks, clearly selling pressure, right? However, We broke down here. So remember what we just talked about before. Breakdown, right? Yeah, this thing is going down. Let's get on a short, right? What do I want to see? What don't I want to see? I want to see it go down. What don't I want to see? I don't want to see a green candle. Literally the next candle, followed by a bullish gap, right? So now that's pretty interesting. So we sat up in our seat and we're like, wow, that's interesting. Still bearish, but the tape changed. So remember, order flow, is it obvious? Tape reading, is it still valid? It broke down, rallied hard, and then paused. So a few of these stocks, Alcoa, Boeing, Caterpillar, we have a big list of them, Raytheon, RTX, still bearish order flow, but the tape changed. And I just want to give you a quick visual again of what this looks like, where it should have broken down. It didn't. It went well bid, bullish gap, and now has paused on lighter volume, which is super interesting. So now I'm going to be watching those stocks. Again, if we go back into the setup of the rotation for the week, energy, basic materials, and industrials. So they had a pretty good week. They're still negative, but they're working their way back towards positive numbers. So those stocks still have bearish order flow, bigger picture, specifically basic materials and industrial stocks. But last week they did something they shouldn't have if they were going to go down further in the short term. So now I'm watching those stocks. They broke down, reversed, bullish gap, and then paused. It's pretty interesting. So on top of looking to be a buyer of energy stocks this week, we are looking at industrial stocks and basic material stocks to see if they follow through on that short-term reversal. But now this is really where it's important. If we decide that we want to be a buyer of those stocks that have some selling pressure because they reversed, because they did not do what they should have done when they broke down, this is different than trading in the direction of the big picture. If we see some short-term trades as a buying opportunity in industrial stocks and basic material stocks, for me, it would not be full share size. It would not be, because we're trading against that. So that would be a cash flow trade, or where I'd probably have 1/3 of my position size looking to add if it continues in that direction. So again, keep this super simple. Am I trading with the big picture? If the answer is yes, for me, that means more initial share size and look to hold longer, maybe even add to that position. If stocks that I'm looking at are obvious, but trading against that in the short term, if I plan to trade that because it's against the big picture, it would be short term, lower risk, and quicker profits. If that kind of stuff is new to you, just rewatch this again, pause it, go back, take notes, because it's pretty easy to follow once you get a little bit of make it second nature and it becomes habit to you, right? Is it obvious? What does that mean for share size? Is it obvious? What does that mean for how long I plan to hold the trade? Is it obvious? What does that mean for which type of trailing stop loss would I use? Would it be a quicker one? Or would I let it breathe a little bit more because the dominant side is in that direction and I think there's more profit potential? So again, to map out the entire week, the likelihood of the market going down, at least for the next couple of days, Monday and Tuesday, as of right now, is lined up. If that happens, and if we stay below Monday's opening price, and actually I want to give you a visual of what that looks like because it's super important. So if we hop on over and go back into the SPY, and we're going to go to the weekly chart. If we get a candle like this, where we are lower highs, lower lows, and below the opening price, then my list of stocks that I plan to short sell, and I'll show you that list again just one more time so you could take a look at it. Actually, you know what? Let me actually break this down for you over here. So you can see I give this list every night. These are the stocks that are bearish in play. If the market rolls down, this is the list of ideas that I plan on trading on the short side today. If the market catches a bid and trades higher, these bullish ideas would be valid, but less position size and quicker profits because the big picture is down, but the short-term picture is up, right? That's a lot. Is the weekly candlestick in the S&P 500 red or green? If it's red, more aggressive and hold longer on the short selling ideas or buying puts. If the weekly candlestick of the S&P 500 is green, less aggressive, less position size, acknowledging its short-term trading, and I would be looking for quicker profits. So now we have both sides of the market mapped up. Less aggressive if we rally, more aggressive on the stocks that already have selling pressure. So if we're looking at these ideas, we're talking about this list of stocks would be more aggressive. You can see the majority of them are tech stocks. And this list of stocks would be more of a cash flow trade, which, by the way, if you didn't catch the trades last week in the casino stocks, my word, LVS and WIN specifically, LVS had this breakout level. We're looking to see if it pauses and holds above that level right now, and WIN. So let's be super clear about this right now. The optimal entry in WIN was this day right here. After this decline, it pushed down and rallied. That was the entry right there. So we're actually about $10 too late. So what we're looking to see in WIN and LVS is very similar to what we're looking for in the energy stocks this week, which is a pause to reset the optimal entry. And then specifically for WIN, we're looking for another $10 move if we get that pause. So it could be sideways, it could be a pullback. Either way, we want to reset the optimal entry to look for the next move. So recapping it, energy stocks strong. Electric vehicle stocks and technology stocks are weak. If we get follow through, those are the trades we'd be looking to hang on to a little bit more. Basic materials and industrial stocks heading into this week look like they're changing the bearish order flow. So the bearish order flow is still valid, but the tape changed a little bit. So it's going to be interesting to watch those groups of stocks, and specifically keep an eye on CF this week as well. If we take a look over here, CF right here, CF is actually now holding. You know, the 50-period moving average is one of the stronger levels that we're watching, and now it's stayed above there for 4 days and right at a breakout level. So we're looking at CF from 106 probably up to around 120, right in that area. Whew, we got a lot. We covered a lot today, but we're mapping out the entire week. So hopefully you're tuning in with this and watching the replays every Monday, because we map out the entire week. Now, what's kind of exciting about this is if what we expect to happen happens, we already know exactly what we plan to do. If what we're looking for does not happen, we have a choice. We could be like, you know what, let's just drink more coffee and not put any money at risk. Or we could take some short-term trades. Now, you might know that, right? But are you doing it? The problem that we have sometimes as active traders is we're really excited about being involved in the stock market. We're really excited about showing how much we've learned and we want to do it. Sometimes the smarter trade, if it's not lining up perfectly the way you want it to, is to do nothing. And I know a lot of people don't want to hear that, but sometimes preserving precious capital is the right idea if what you're looking at in the market is not obvious. Super, super important. So hopefully we did a good job for you today. Have an awesome day, everybody. If you have any questions, don't hesitate to leave a comment below the video as well. Take care now. Thank you so much. I really appreciate it.